On Wall Street, which is giving investors a major case of whiplash. The market's plunging again today. Right now, you can see that the Dow is near its lowest point of the day, 590 down. That's after surging nearly 1,100 points yesterday, its single largest one-day point gain ever. The broader markets are also tumbling. The S&P is down. The NASDAQ is down. You see the numbers there. S&P down 67, NASDAQ 211. Both of those indices saw their biggest gains in nearly a decade yesterday. So joining me is the U.S. editor of the Financial Times to help us figure all of this out. Financial Times of Alphaville, Brendan Greeley. Brendan, good to see you. I'm obviously a little verklempt about all of this. So let's start with the basic question. What the heck is going on?
Well, there are a bunch of broad things going on. First of all, anybody who tells you that they know exactly what's going on with the S&P 500 on any given day is trying to steal your money. But broadly, what we know is that when the Federal Reserve loosens monetary policy, it inflates asset values, right? Your house gets more value, the value of your stock portfolio grows. When they remove that support, those asset values then shrink again. Your stock portfolio shrinks, the value of your house goes down, right? So this is a broad thing that is happening. More specifically right now, one of the things that we know from businesses across the U.S. is that their input costs are going up. What that means is that wages are going up. That's a good thing for almost all Americans. And that tariffs have increased the prices of some goods that they use to make things. The problem is inflation isn't going up at the same time, right? So if you have input costs going up and inflation not going up, somebody gets squeezed in the middle. And right now, it looks like that's possible future corporate earnings. Where is that reflected? It's reflected in the stock market, right? So broadly taken, it kind of makes sense that stocks, which we knew have been overvalued for a very long time now, are starting to come closer back down.
But even if we knew that, we don't have to like it. There's something around half of Americans who are invested in the stock market via their 401k, and they're looking and saying, am I going to have to work a couple of extra years depending on where this goes? If you talk to money managers, especially in middle America, I'm not talking about the people who have millions of dollars in the stock market, you know, in some of the big cities, but just people who want to be able to retire comfortably, they will tell you their phones are ringing off the hook with frantic people. We know that the advice always is hold tight. This is one of those things. But what do you say?
Well, absolutely. But again, when we talk about we and this 50% of people who own stocks in America, right? Only 14% of people own stocks, or households at least, own stocks outside of their 401k plans. Now, if we look at those 401k plans, what we're really looking at is by the time somebody is between 55 and 65, the median value of that 401k plan is $80,000. That's not enough to retire on. So if we're talking about panic, the panic is not because the stock market for the time being is momentarily failing to outperform. It's because over the last 20 years, as wages have been stagnant, you know, people have not contributed enough.
Yeah, but maybe $80,000 is not enough to retire on, even if you come from a tiny little town in the Midwest, as I do. Having said that, if you already have a pension and that's kind of a cushion for you, $80,000 might not seem, again, like a lot to somebody who's been used to getting a six-figure salary, but for the average American, that can be a couple of years' wages that they put aside that makes them feel a little bit comfortable. So
that's
you got to understand
right.
the panic and what do they do? That's what they want to know. What do we do?
Well, very specifically, what's going on in the last several weeks is uncertainty. So on top of all the longer-term trends that we've been talking about, investors and markets don't like not knowing what's going on. So a lot of the things that have been coming out of the White House, regardless of whether you agree or disagree with what's going on, their broader policy goals, we don't know what they're doing on a day-to-day basis. That makes people jittery, right? So the end of that uncertainty could make a difference, and that's something to hope for the new year.
One of the things we can all agree on is that all of us should put away probably a little more money than we are right now. Give up the new pair of shoes. Brendan Greeley, thank you so much. Appreciate it.
Thank you, Chris.
Hey there, I'm Chris Hayes from MSNBC. Thanks for watching MSNBC on YouTube. If you want to keep up to date with the videos we're putting out, you can click subscribe just below me or click over on this list to see lots of other great videos.